Let's begin with this market reaction to this morning's CPI data. Jim, I know you love to look at internals.
Yes.
Thank you, Energy, down 3.6. Used cars up 4.4.
Okay, so used cars is not up to date. The last few weeks, used cars, the margin between used cars and news, and MSRP, by the way, is down too for the new, has really gapped in that used cars have kind of really plummeted, maybe 5%, which is not captured by this, but that's okay. I mean, you know, you're looking forward. That's a category that is a win for the Fed. The loss is housing, and we just don't have enough. And all I can say is, David, I don't know if you see some of the notes on student loans, but maybe people just won't be able to go anywhere and it won't bid up housing. But right now, Toll Brothers $1 million.
Yeah.
And by the way, it can go to 1.1.
There is an expectation, though, that rents are going to start a fairly significant decline.
I know, but where's it coming from?
What do you mean when you say that? Where is it coming from?
Well, I mean, we have whole regions of the country where there are people bidding worse for rents.
It's true.
It has to do with regions, right?
Yeah.
The Cleveland region.
Yes, Cleveland.
One of the hottest regions of the country.
It's apparently millennials
Cincinnati,
or
right?
people moving to Cleveland.
No, I mean, this is
because it's cheap.
It's a little anecdotal, but the fact is that I don't have an answer for. I don't have an answer for housing in general.
Right. Well, you're talking about ownership. I'm talking about rentals, but
rental is CPI.
Yeah,
Rental CPI.
Is exactly.
Yeah.
That's
rental
what I'm
CPI.
asking.
Well, I'm hopeful on that one. We need to see more building, but I just think that if that's the last one, that's not bad.
As for yesterday's action, of course, first 52-week high for the S&P in a year,
right?
For 360 trading days,
right.
And some reports on one of the fifth biggest short covering episodes in about 4 years, 5 years.
Look, we'll probably have a quarter of the S&P that will be at its 52-week high for the last 2 months after today. And those who keep saying it's a head fake, when does a head fake turn into a profit center? Like, what do we play here for? Are we here to theorize, or are we here to make money? Because I got to tell you, you make money by being long stocks right here. That's what happens, okay? Well, not AI.
Is there a reason you're yelling at me?
It's echoing through the building.
Yeah, I got my voice back, and it's kind of cool. I'm like, oh, excited.
9:03. Usually you don't start yelling at me till like 9:20.
Well, because I was waiting for you to say, well, AI is going to make it so that we're all, the 14th Amendment and 13th Amendment repealed because of the machines. What I'm saying is that right now, people are making more money than I've seen in this market in maybe, I don't know, how about 12 years?
Well, you're benefiting even if you own just the S&P 500 index, despite the fact that many of its components haven't gone up at all, because, to your point, 7 or 8 of them have gone up enormously.
Okay,
but actually, it's because of AI.
A guy like Wilson, he needs all 500 of the S&P 500 to go up before he is certain that the S&P 500 is to go up. That's called circular reasoning. It's
terrible.
Circular reasoning.
Jim's referring to Morgan Stanley's Mike Wilson, who
he needs 600. Do you know how many stocks are in the 500?
Hundreds of stocks.
Yeah, he is right now poised to say, listen, until 600 and 500.
You're being very unfair to Mike Wilson.
I don't even, he just doesn't even exist. He's just some GPT guy.
So you are of the belief that, as Goldman said earlier in the week, there will be catch-up among the other names. And these periods of narrow leadership, it will be more like 2020, where everybody else comes to join the party.
Yesterday we had so many good industrials that were up, so many solid industrials. We're starting to get some transports that are up. I mean,
so there was a bit of a broadening that made you happy.
Supporting healthcare.